Hello, good morning. If you're joining me, or joining us from the US like me, or if you're joining us from Europe, good afternoon. Asia, good evening. Good to have you all join us back again for this week's Dairy Cafe.
Good to be here. Yeah.
Yeah,
You're
Vesper's
in a new,
bi-weekly episode.
you're
Oh,
in a new
sorry.
environment, buddy. Tell us about it.
New environment. Yeah, the Chicago office. Vesper is expanding. We're sending both some Dutch guys over this way, but also getting some local Americans to join us.
Unbelievable.
Yeah, we're gonna work closer with the US market, be a bit more on the ground, boots on the ground, be around people. So
Nice.
our colleague Dan is joining us on this side. You might have seen a bit more about him. So yeah, we're very happy to also expand this way
Super
and
cool.
have a solid headquarters in Chicago and the headquarters in Amsterdam. And yeah, Vesper Global.
Look at us. Beautiful. What are we going to speak about today, buddy?
Yeah, that's. I think it's a good question because there's so much to speak about. We announced that we're going to speak about proteins, which we definitely are. But I was talking to Jasper about it yesterday. He said, "Yeah, but we do also really need to speak about the rest of the market because there's a lot happening." And actually, with so much volatility in the market, maybe before we go to graphs and data and whatnot, I'm really keen, Jasper. Your job as an analyst, does it become much more difficult in these weeks?
Yes and no. I always like to make things quite political, and these are my answers. Yes and no. I mean, trying to make sense of everything that goes on is an extra job. There's so much happening in not just one market, but many markets at the same time. And yes, that's definitely becoming much harder to do. But also no. Some of the part of my aspect that what I do is the Vesper Price Index, of course, and even then, of course, you have more views, but the methodology and the data behind the Vesper Price Index doesn't really change. So parts of it stay the same. It's just a much more interesting market to track. So the insights into that market really, those get much more complicated. So the Dairy Cafe is only a harder one for me.
Yeah, for sure. You probably get a lot more people that are angry with whatever you write, if it's one way or the other, right? If it's going down extremely fast, you have producers saying, no, it's not going that fast down. And if it's going up extremely fast, you're like, no, it doesn't go up that fast. How do you react to those? And you just base most of it on fundamentals?
Yeah, I think regarding the insights, of course, one very important part is to make sure you have the most up-to-date information and data that generally leads to the much better analyses. The difficult thing is you're never going to be 100% correct. I think it's very important to always mention, okay, based on the information that I have today, this is my view. And the most important thing is being able to look back in case you were wrong, explain why you're wrong, and in case you're right, pinpoint, okay, then these couple of assumptions were right this time, but just be careful, like they're not given from this point on, but you really need to make sure you're always constantly adding new stuff. And I will have to admit, in recent couple of weeks, it hasn't been the easiest.
No, indeed. And I mean, I think you said a very valid point and something I can completely relate to. Whenever I speak with, especially I find the best buyers out there, they always say there's two things we try to do. Number one is we try to stay humble. And number two is every week it's a new market.
Yep.
And you got to try to look at it differently every week. And if you thought it was going to go up last week and you're persuaded by it, it's a new week. Let's see what happens. Maybe it's not. Maybe fundamentals change. Maybe there's a short position out there and market is going to move. And I think that's extremely interesting. And I think it relates to a bit what you're saying as well. And this humbleness, I think, is also right. You can't be 100% right.
Yep.
Sometimes you will get it wrong. What's important to know why you got it wrong and what you can do to try to analyze it and take into account the next time you analyze something.
Yep.
And maybe to repeat, because you just said it already, because when we talk about right or wrong, we're of course not talking about the prices you see on the screen. These are calculated based off of the input that we get from actual people in the market. So these are basically your transactions that we aggregate together and then calculate to a price. Jasper can tell you a lot more about the methodology, of course, if needed, in another forum. But when we talk about right or wrong, it's about your outlooks and your reports, what you say in these webinars, what you expect the market to do, also for yourself.
Yep. Indeed. And that's what we, I think, I try to do the best of my knowledge, and I think that's where it's really, really helpful to have a good, extensive network, being able to contact people, ask the right questions, discuss the right things, and ultimately, it can be that everybody thinks the same and everybody's wrong. So it's never 100% guaranteed, but still, it's very, very valuable to just make sure that you're always discussing some things, test your assumptions,
I mean, completely. And to be honest, being an independent, information provider, you try not to take a side, being one or the other. However, the only thing that we're asked the whole day was, what is your opinion? What do you think happened? Is it going to go up? Is it going to go down?
Yep.
And there, I think it's important to say we do try to give an opinion based as much as possible on facts. But that's why it's extremely important. I think that's what you said, Feiko, to make a big distinction between what we say and what we publish as well, right? What we publish in terms of pricing indexes, that's not an opinion.
Yep.
That is based on actual facts. That's about actual prices that we receive. That's a calculation we do.
Yep.
And that the market goes up or goes down, it is the same. So that job isn't harder. That job is exactly the same. What makes it hard is the opinions we have in a very volatile market, because they can be wrong from one week to the other extremely quickly.
Yeah. And then it's like you have this image of the 6 or a 9 on the floor and two people pointing at the same thing and then seeing a different thing, a 6 or a 9. And it's kind of like this. It's also like the spread is massive. People trade at varying prices throughout the week. And we see that as well. But ultimately, our methodology and the calculation ends up the VPI like we have it. And I think it's very important to call out that remains the same.
Yeah, that remains the same. And I think that's also, we were discussing this a bit, but that's where the marketplace as well comes in handy, right? As you said, Monday, Tuesday to Wednesdays, up until Fridays are different markets. Sometimes it goes up and down 300 euros within the same week. And that's where the marketplace can be interesting, because you got daily prices if a price is transacted. And that's actual prices that you see on screen that are being published or that are being put or that actually closed on the platform, and that's extremely interesting. And that's things to really look out for. And that's why we believe strongly into this marketplace. But we believe in this marketplace with a combination of the data. And because we do this, we don't do this for the transaction fee or whatever. No, we do this because we believe that data is important, and that data can bring a lot of value to our customers.
Sounds good. Time for graphs, I think, because there's a lot of talking on our end. Let's see what's actually happening. Shall we start off with a really quick walkthrough of the general market changes in the past week, or do you want to go to proteins first, Jesper?
No, I think it's good to do a general update first. I promised some people I spoke to today that I would mention butter in the Dairy Cafe, so here we go.
Look at that. Every week we just have to mention it.
But we can't escape the butter market. So this week we saw an overly or interestingly weak market for several products, and not for the higher proteins, but we'll talk about that later. Butter actually decreased this week from 4.13 in the European market to 4.05. I've seen the price range between €4.5 to almost €3.80. Even lower than that. So massive price range, but on average, you still see prices around the €4 mark. In the US, they actually increased a little bit, but that's primarily due to the exchange rate. But Oceania, interestingly, also fell. So global markets really took a hit this week. It seems like all of that additional supply is starting to push, and especially in Europe, we see that primarily the Western European market is under a lot of spot pressure. There's a lot of butter available that needs to be sold, and some people really actually need to get it moving because the warehouse is saying, hey guys, you got to pick it up. It's full. We can't do anymore.
No, completely. And on the other side, consumption has been extremely, extremely weak. We hear, especially from big croissant makers from the start of the year. Now, those are numbers that are going around. They're not facts, but we're hearing, between the -8 to -15%, I've heard, in terms of numbers of sale on their sales side. So consumption is extremely bad.
Yep. Moving to cheese.
We got a question while we're still on the topic of butter, and I think it's an interesting one, and we'll answer it live. It's how do we explain the rather big gap between the butter VPI and the zuivel NL price? And
sorry, go ahead.
I think
okay.
I think it's quite simple.
Yeah,
the question at least. The answer might be.
I think the question is relatively straightforward indeed. I will actually not just pull up the zuivel NL price, but I will also pull up the German and French prices for butter. What we see is that there's multiple differences, of course, but I think one of the main ones is a difference in methodology. So I'm looking at the Atla price as well as the Kempten price. Those three make up the EX. So what we see is that generally both the Kempten and the zuivel NL price, as well as the Atla price, take in transactions from the week before. So yes, we've seen an incredibly weak butter market this week, weaker than the week than we've seen in previous weeks. The VPI considers only transactions taking place at this calendar week, so Monday, Tuesday, Wednesday this week, and then the average of those pricing of all the prices that were traded on that day, on those 3 days. Sorry, but in the case of Zuivel and Kempton, that's also including last week. They really report on more previous or historical dates. So that simply means that, especially in falling markets, we see that there's always a difference between the VPI, which is generally lower than some of these other indices. And that's, if I'm really honest, something that we have seen in falling markets, especially throughout the last couple of years.
Yeah, and going up sometimes it's the opposite way around. And I think it's also important to say the amount of people that we receive input from and the broadness, let's say, of the people that we receive it from is totally different than what you hear on it. Than on those benchmarks.
Yep. Yeah, and that's the VPI problems as well. So any price you see is collected in the same period as it's reported. So any VPI from this week always is only data transactions from this week. Yep. So staying close to the market. Great question, and we'll think Zuivel now might catch up next week if the prices stay the same, and otherwise we'll see them a week later. Follow the VPI. On to the mozzarella, I think.
Yeah, cheese has been an interesting one this week. I see Seb nodding already.
Yeah,
also, he's talked to many players about this. We've had a very straightforward Q1 and actually Q4 as well, where we had low cheese prices. And the reason why I'm pulling up mozzarella first is it kind of tells the story. Prices in Q4 were very weak. We needed to find a way to get rid of these cheaper volumes, so we started exporting a lot. We were cheaper than US mozzarella in this case. So Q4 saw plenty of good exports, and usually Q1 then follows, which is a boring and stable market that generally leads to the slightly lower prices. Yeah. But because we locked in all these exports, we saw prices move up. And then the last week of Q1 is when suddenly a lot of producers had a look in their warehouse and, oh, wait, okay, it's currently not that full. It's still relatively young cheese. So like the current stock pressure is not there. But we have one of the biggest milk flushes in history coming up. And not all of that product is sold. Why? Because ever since we've reached December, we're not the cheapest anymore. So I would be surprised if Q2 export books are as full as they were in Q1. Yeah. And that's really starting to make a difference. And yeah, then suddenly also what we've talked about in a market that's not incredibly liquid in today's dairy industry. In a week where not too much is traded, but you do need to sell. Oof, good
tough. No, 100%. And with this milk coming up, it puts pressures on all those prices. A part of the big one that we're going to talk about, of course, proteins. But here on mozzarella as well, what's interesting, a lot of the European buyers had the time to buy their volumes whenever it was low, and they purchased their lots and locked in a lot of prices and a lot of volumes at those prices. And they had time to see. They knew it was going to come down probably at some stage again, and they had time to wait. And I think that we're seeing now a bit more volumes because prices are dropping, buyers are stepping a bit more in the market, but it's extremely little for the moment still.
I'm going to force you to keep a little bit of pace here because Jasper wrote his latest cheese report. I've added a link to it on the screen for our viewers to see. Not because I don't think cheese is important, but just because I don't want to get stuck on cheese and miss out on proteins.
Yeah, we're going to make a start on the protein. I think this is the final one we're going to discuss before we go into whey proteins and milk proteins. Of course, this is also protein. US S&P, US non-fat dry milk or global S&P. These markets dropped. Oceania and Europe saw slightly lower prices than in the past couple of weeks. Not an immense reversal. I mean, it's minor, but we do see that prices dropped a little bit. The US doesn't seem to care. We're really heading towards that $2 a pound mark, which is a level that we haven't seen since 2011.
Wow.
We talked about being up to date, etc. On make sure that everything is you're always aware of the latest information in some dairy markets, and then you make your outlook or your prediction based on that. I didn't expect that at the start of the year we'd be at one of the lowest levels ever, and then in 3 months' time we would be at the highest level that we've seen in 2011. So some of these markets always catch you off guard, even though you've done your homework really, really well. With milk powder, there's a lot of demand, but the uncertainty in the Middle East also it creates a bit of a volatile market to a certain extent, and we know that there's a good amount of volume coming up, especially from Europe, the big flush, and any person I speak to that's currently kind of in contact with somebody that, well, they closed down their drying tower for S&P in the last 2 years. They suddenly open it up back up again. They're buying skim milk concentrate at record pace, and they're drying more S&P. So yes, we still have higher pricing for S&P, and no, I don't think this is the reversal at all. But we do have a lot of product coming up, and that do needs to find a home. And if the exchange rate, or in this case Oceania, starts to move a little bit, then yeah, that creates differences in the European price level as well. Liquids as well. I did see an interesting change this week. So we've had a strong divergence between SMC, which is really cheap, and S&P, which is really expensive. That narrowed this week because S&P lowered and SMC increased. Same for cream and butter. Cream moved up, butter moved down. So even though we're heading towards the peak of the milk flush, the range between liquids and the actual commodities did decrease, which is quite unusual. So I don't expect that to stay throughout the entire second quarter, but it is an interesting thing to follow. And it does indicate that a lot of people are producing commodities.
Yeah. The interesting one here, let's just cover this one quickly. It says, how do you see the impact of the current situation in the Middle East on dairy markets? And I think that's especially relevant with powders. I mean, there is a correlation with the barrel price and the skim milk powder price. Whenever one goes up very fast, often it follows.
Yep.
Is there any other things that you see being impacted?
Yeah, so we as Europe are currently very export dependent for S&P. And it does mean that some of these exports aren't really taking place because we aren't able to ship certain things. It might become much more expensive to ship certain things. So I do feel like it might impact the S&P markets a little bit towards kind of slightly lower prices, but on a general scale, I don't see a huge amount of impact on European dairy prices or US dairy prices. Yeah. I see an increased level of uncertainty. It's messing with a lot of buyers' mind. Okay, I don't want to take any risk. I'd rather purchase now than I do later. But that's more of a psychology change than that the entire dairy market is fundamentally different because we can't export here. So I'd like to split it up into the fundamental changes, which aren't that big, but a lot of the sentiment is definitely driven by what's happening in the short term.
Yeah, but for production pricing there, if you pull up Dutch TTF gas, for instance, in this overview,
yeah,
and this is I think the dryers who were using a lot of energy, and of course if you zoom out to 5 years, you see another crisis coming back. But if you look at it from this way, you've come from low in the 30s to high in the 50s. Yeah, this is a massive jump, and if we don't get this under control, I think production is going to be much more expensive.
Yes, I do think indeed that's a point. We're lucky that for drying powders, the profit margin is currently high enough that we can absorb some of this. But indeed, this is not great. It hurts, and I hope that many had locked in some of their energy pricing or hedged against it. Because I zoomed out. Indeed, we don't want to reach this situation anytime again. So yes, we've prepared better this time, but there's no guarantee. And anytime I hear that the conflict will be over in a week, it lasts another one. So yeah, I don't want to make any predictions on when that's resolved, but it will definitely hurt some on the producing side.
Yeah, clearly.
Proteins?
Yeah, proteins. I said there's 10 minutes left, so I think it'd be a good one. Be a good one to answer.
Yeah. I think in general, we have seen a protein market that has been fundamentally the same as it has been for almost a year. We have seen that the protein market is tight. There's plenty of supply. Like production, it's up, but it's not necessarily causing the issues. The issues is there are so many new consumers out there that are consuming WPC 80, WPI, even milk proteins, to a certain extent S&P, at a record pace in yogurts, shakes, meals, bars, drinks. There's so many new applications, and also the GLP-1 medication. It's all starting to add on top of each other. And then the interesting thing came at the start of this year where we saw that because the prices are relatively high and not everybody is able to buy like quarters in advance and full truckloads, some of these smaller brands only needed a couple of pallets or a few bags. There's always a kind of a push for the spot market. And the spot market in the case of whey proteins, AD and ISTAT in Europe at least, means 6 weeks before the quarter starts, we would see a lot of purchasing activity to make sure that everyone has enough for the next quarter. So we saw a scene throughout Feb. we've seen a lot of activity for Q2 demand. And that's actually, if we kind of zoom in on what happened, we start to see that throughout Feb, we really see that this market accelerated from 14 and a bit euros to now our latest price level, which is just shy of 20, because that spot market just dried up. Like any volume that was out there suddenly disappeared, or it was already locked in by some bigger brands, and then you're left picking up some of the pieces, and instead of 14 and a bit euros, or 12 even, if you look at November last year, which is not even half a year ago, you're now almost paying double.
Oh, completely. And I remember we were saying like a couple months ago during one of those webinars, how are those brands paying that price, right? And you said to us, it still is comfortable. They will absorb a lot in their costs, marketing, etc. And they know that they're just trying to get market shares. But at some stage, it's gonna bite them back. And I think that we're seeing now the turning point with a couple of really big Dutch brands that have announced as well publicly to their customers that the price have gone so high up that they'll have to actually now up their own prices to their customers quite significantly in order to absorb that price increase, which is we haven't seen that before, actually.
Yeah, and that's what I like, or at least I don't like it. I'm also a consumer, so to a certain extent, I'm not generally happy with this. But I find it interesting to see that the fast price increases also kind of caused the urge for them to explain, like, hey guys, this has actually been the reason why this is going up so much, or it's really hurting us. And yeah, we tried everything we could, but if we see some of our products go up 80 or 100% in price over in a year's time, we have to do something about it.
Yeah, it's interesting to see how Vesper has made his way from being used at the negotiation tables to also being used on social media to justify price increases directly to consumers. But I think that's what's happening. But it's also the interesting thing is it's a cycle we see in the chocolate market, which happens more quickly. Also, of course, a more explosive increase where you see demand destruction. And I do think we are, I think, very bullish on this market still. We see that there's not enough to go around, and before the supply side catches up, it's going to take a while. It's long investments. But I do think if demand starts being destroyed just because it becomes more expensive, because the consumer doesn't want to pay this, you do see that is what changes the market. The chocolate market, it went back down, partially because fundamentals became better, but it also in large part just because demand went down, because people are not going to pay €8 for a chocolate bar.
Yeah, and I think that's a very, very valid point. And we've raised it many times before. We weren't sure at what point prices will be increased towards consumers. And of course, supply and demand works as in prices go up and then demand lowers. But if the consumers don't actually feel it, then we don't see that correction.
Up, of course.
And at this point, now we are starting to see that those prices go up. We don't have we haven't seen kind of the price elasticity of consumers in the whey protein space. Yeah. So that's something that's really interesting. But we are starting to see a slightly different thing, and that's movements within proteins. What kind of protein do I use? I think whey protein isolated WPC 80 is an interesting one. But I've also pulled up. Here we go. I pulled up the US and European price level of whey protein concentrate. And I've pulled up the price level of milk protein concentrate. And you don't even see it that well, but milk protein is actually feeling the push already. We are starting to see much higher prices for milk protein. Why? Because anyone who has the option to reformulate will do that. Consumers might not see some of that, but we know that reformulation is one of the ways where brands can keep their profit margin higher, or at least keep their margin healthy, without having to make sure that they increase the price towards the consumer. So milk protein is definitely something that we also see playing a role there. And we see that alternative proteins are a thing. We've been sent a sample of pea protein. Yeah. Still need to decide whether this is the best taste, but I must admit it's much better than I thought it was. So
it is getting better. Like I do still see a difference, but it is definitely getting better, and I think it's only going to get better with more investment coming in the market. But I think you said something extremely interesting, and that's the elasticity of the price. These are new products, not new, but they are relatively new if you compare it to a butter or skim or chocolate, where you know what is the tipping pricing point. But this is so new that and there is such a craze around it that how much can they charge for a scoop of protein? I mean, we just don't know yet.
No, and
We've never seen those levels.
no, exactly, and then that's something that we will have to figure out as consumers. Okay, am I still willing to pay this price, or am I going to go for a plant-based nutrition? Am I going to go for a different product? And that's definitely something that we will have to figure out. But it is interesting, and that's kind of this is more the sports nutrition space where sports nutrition consumers have always been kind of a thing, but a lot of these additional consumers that have come into the medical regions, the GLP-1 medication, for example, or just average foods that now also have a high pro version, we don't know how much of a premium indeed those guys are willing to pay, because it's not necessarily good for them, but they also need it practically.
Yeah.
And I've talked about this with a couple of producers and blenders as well. It's really interesting to hear. It used to be that those producers sold to 1, 2, 3, or 4 big sports nutrition brands in either US or Europe. Those would be their main clients.
Yeah.
But they've now exported to all these other destinations. It's also China, it's also Japan, it's also
Southeast
India,
Asia,
Southeast Asia. All these countries, Mexico, are suddenly consuming so much more protein. And then it's not just the sports nutrition guys in those countries, is also some of these retail products, medication. There's all these different new applications, and it's really hard to kind of make one big overview and say, well, roughly at this price, they'll turn or start seeing their consumption drop. We don't know.
Yeah.
And it might be different for all of these different consumer streams.
Yeah. Do you feel like, for example, I mean, in WPI, I'm sure it's easier to say than WPC 80 because it's even higher, and we're arriving at prices that are completely wild. Do you see demand drop, or as many people as are turning into WPC 80 now because it's a bit cheaper?
Yeah.
Do you see there a bit of switch already or not?
We see a little bit of a switch in. So there's two things we see. One, we see an increase in demand for MPC. So that's something that we don't see kind of at a very tight market, or a tight market for 80 is not something you see on a daily basis. But we do see some of the market demand falling off from the whey proteins to different products. So that's what we see. And move from isolate, whey protein isolate, to WPC 80 is also already being made.
Okay.
And plenty of foods where some of these products are being blended, especially if you look at the pricing levels over the last few months. So let's say a couple months ago, you would get 80 at 16 euros, while isolate at that point was already close to 23 euros. So the price difference back then was already massive, and you could use slightly more 80 and still achieve the same level of protein if you're not really reliant on, okay, I need that low calorie, purely isolate product. So some of those formulations started to take place, and that's why demand for 80 is currently booming. And demand for isolate is not necessarily the same.
Okay.
And I think this is also where sometimes if we start talking about replacements, different ingredients, it's where the R&D department starts shaking and becoming increasingly afraid and frustrated. I do think cost models has been such a good feature here. Being able to just compose your entire recipe, your own product, see how it looks differently, bring that to the table, see how your protein bar looks with pea protein instead of whey protein. And at least to have the data to back it and start talking about it with your R&D department. And that justification why a switch might be needed, what is possible, and testing it out, at least money-wise, before going on a long tangent, especially with the forecasts up to a year out. I think it's really interesting to see just different scenarios of your own recipes.
No, absolutely. And I think it's definitely worth looking into, because, we've already kind of mentioned this, but we don't necessarily see this market turning anytime soon. It will have to run into its limit someday. But at the moment, we don't really see that level reached just yet. We need to find out how good that demand is to see it, or how elastic that demand actually is, and how high prices can go before we reach that level. And we'll get there. And the higher we go, the more nervous people get.
I mean, we'll quickly see, right? They have announced, the really big Dutch brands have announced price increases. So we're going to see them probably straight away. And I mean, that's what's good with those, especially with those young brands that are extremely open with their value chain, and the price that they pay and the margins they take, and all the ingredients that are made to make those products. I'm sure they're going to be open with, hey, listen, it's going back down now, so we can decrease our prices. So transparency is everywhere, which is good, I think, as well.
No, absolutely.
And I think that we're going to learn quite fast where this elasticity can go towards.
Great. Well, I show you the link to the latest Jasper report on the screen once more, as someone just asked about the cheese markets. There's a clear outlook for every individual product, both short and long term, that can be found on the platform. Sebi, big economy lesson for you today. Well done. Elasticity, big word. I'm impressed.
Complicated word for a French person, but I think I got it through.
Très, très bien. We're very proud of you. It's a market we're very interested. Jasper will write a new report next week, but I think it's not a weekly thing. It's a monthly thing. It's a yearly thing. Seeing where this actually ends. So we're very keen there. We'll keep you posted on everything we hear, we see in the markets. So we'll be there by your side. The Dairy Cafe will be back in 2 weeks' time. Jasper, I have one last question for you. What's the maximum you will pay for your protein shake?
Whew. I must admit that somewhere around 30 euro for a bag of protein is where my limit would be, but we're not there yet.
So we need to start shrinking the bags to keep you happy.
Yes. Exactly. Thanks, everybody.
Thanks so much for joining us.
Bye-bye.
Bye-bye.